Welcome back. It is Real Estate Wednesday. So if you read the title, it was Navigating the Path to Home Ownership, but this is more of a first-time homebuyer edition. But even if you bought a house in the past and it's been a while, you might get some benefit from this. So grab a pen and paper and join us. Hopefully this won't be too long, but I want to make sure we get a good rounded knowledge of the whole process as far as what it costs, because someone commented on the YouTube channel, just some feedback if they thought it would be cool to have a video more like this of like, really, how does it look? Because people just don't know, and there's a lot of information out there.
I do think that we have a lot of people that just don't ask. So we're thankful that we had somebody ask. And sometimes we get more than that. This is a good topic, and it is a good topic for today.
It's going to be good. And later this week, I'm going to be meeting with a lender to do another one of these type of videos and just talk about just the lending process. But we're going to touch on that right now in this video too, so you get a general knowledge of kind of what to expect when you are talking to the lender and what the options could potentially be for you. So when you're buying a home, people a lot of times will start with credit score, right? We'll have to have this amazing credit score or I'm never going to get into a house. Well, surprise, you actually only need a 580 per lending guidelines. Now, some lenders may require a higher score, but that's their own company policy. And that's why not all lenders are created equal. So that's also why you may get denied by one lender, but another lender will approve you. Not all of them have the same guidelines, and sometimes they have their own personal rules and stipulations that they put on things just for that specific institution. I will say a caveat to that, even though you need a 580 score, it's not necessarily going to get you the widest range of options, right? So if you have like a 640, 650, you're getting up there where your risk assessment is not that bad because you have good credit, but then you also have a wider range of products available to you. And sometimes, remember, we're not lenders, but this is just what we've learned through the years, is that the higher your credit is, sometimes that can contribute to you getting a better interest rate because you're less of a risk because you have a proven track record of paying your bills on time. Right. If you are struggling with credit, this is just a side note for you. If you go to, I believe it's Experian Boost, say you're renting right now, or you're paying anything that you're paying on a regular basis, that's a bill that you're getting. Not everything is reported to the credit bureau. So things like your rent or your utility bills, things like that, you can put those things in there to help boost that credit score. So that has helped worked wonders for a lot of people. Mm-hmm. So
pay your bills on time.
Pay your bills on time. That's a big one. But credit is good. I think a lot of people worry about it. Even still on credit, if you have a 0 credit score, talk to the lender because that's still fine. 0 credit is better than having bad credit because 0 just means you haven't even had the chance to build any credit yet. That's right. And that actually looks better than having bad credit. So lending programs. So this is a big one. A lot of people ask me this. I find it kind of funny because we are realtors. So we handle, legal, contract, buying the house, organize your inspections and things like that. I'm not the lending side, but I get a lot of lending questions. So I've spent a lot of time making sure I understand the basics of this to help you guys. So I don't always have to pass you off to the lender. So things to know, there's really 4 main loan programs, right? So there's FHA, there's conventional,
USDA.
There's USDA, which USDA is like a rural development loan, and then there's VA loans or veteran loans. So most first-time home buyers, they end up in the FHA category because FHA has less stringent debt to income. You don't have to have quite as big of a credit score. So a lot of people end up qualifying for an FHA before they qualify for like the more traditional conventional that your mom and dad always talk about. So with FHA, you're going to have a 3.5% down payment. So on like a $300,000 house, because home prices are going up, I used to use a $200,000 example. But on $300,000, 3.5%, you're looking at $10,500 would be just the down payment portion. And don't freak out. It seems like a lot of money, right? But there's lots of things we can do to counteract that. But these are just the standard rules to keep in your mind. Yeah. So the next thing would be a conventional. So if you're a first-time home buyer, which is what this video is geared towards, and you qualify for conventional, if it's your first time, even if you're buying a home as a couple, if one of the people buying the home is a first-time home buyer, you can still get it, even if the other person has already purchased a home. But that one will let you do 3% down instead of 3.5%. And that one would be $9,000 on a $300,000 house. Your other one, or the other thing would be if you're not a first-time home buyer and you're still using conventional, then it's 5% down, which is $15,000 on a $300,000 house.
Right.
So the other option would be a USDA loan. So USDA or rural development, depending on who you're talking to, is a loan that, well, you can explain it.
Well, zero down. That's basically
Exactly.
it. And it's outside the city limits, so to speak, but not like totally country.
Yeah, so it has to be in a qualifying area. And of course, I can check that for you if you're ever curious if a home would qualify, but it just has to be in a qualifying rural area because the loan was created by the government to help boost the economy and boost those just people moving to those more rural communities.
Right.
So the list is always changing on areas that are eligible because as those cities grow, they become not eligible anymore. But keep in mind with rural development, in Tulsa, communities that are rural development for us would be like Coweta or like way south Bixby, Muskogee. And those areas are like 30 to 45 minutes from like a downtown. But that's not to say you're going to be like hours away from like a Walmart or something like that. They're just not major metropolitan areas. The next thing on our list would be veteran loans. So obviously, if you are in the military in some form or fashion, you get a veteran benefit, which is your VA loan. So there's no down payment with that, which is a great option.
I think what did they raise that level?
They have raised the thresholds on all of the loans on what the loan limit is. So just have to Google it though, because this video I don't want to make it super Oklahoma specific because the threshold does change depending on where you're living.
Well, I think
obviously
it used to be like 300,000. Now it's 500 or something. Am I right?
Yeah, something like that. I think FHA is gone up just recently. But anyway, for the average person, yeah. VA loans are a great option though. There used to be a stigmatism on them that, well, sellers don't like VA loans. VA loans are great. I've never had a problem. They always go through just fine. There used to be all these stipulations on VA borrowers that there were all these things they couldn't pay for and all this stuff, and it would make sellers not want to accept them because I don't want to pay for that. And all that is gone. If anybody tells you different, they're lying because there is nothing that a VA borrower can't pay for themselves in 2023 real estate transactions. The other thing with VA borrowers is I would tend to, people think you can only buy one house with a VA loan, but that's not actually true.
No, there's something
more. You can buy
that.
more than one as long as you're not going over the threshold.
That's it.
That's just a little tidbit there for you. The other thing was down payment assistance. So those hefty numbers, obviously with your down payment, that's a lot, especially if you're buying your first home. In Oklahoma, we have a lot of programs that are specific to Oklahoma. So you're gonna have to check with your local lender in your state to see what programs are available to you. But for most of them, they are grants, so you don't have to pay them back. It's not a loan. So it can be a great benefit to people trying to buy their very first home. I've heard even some lenders here in town, they can do like as low as a 1.5% down on a house, which is like, wow. So the lender is helping you front that cost because they believe in home ownership. And there's some really great lenders in town that can really do some miraculous things and even things that I don't know about because it's outside of the wheelhouse of traditional lending. And you're only going to know those things if you talk to the lender. But remember that, a no is not a no forever. It's just a no right now, or it may just be a no because that lender doesn't have the product that you need. So if you're in Oklahoma, and you're looking for a great lender, let us know. We can connect you with some amazing lending institutions here in town.
Do keep it in mind, though, Ryan will be having a video live with a lender.
I'm going to meet with a lender
next week.
One of our lending friends Friday, actually.
It'll be good. It'll be real good. So have your questions.
Yeah, so watch out for that video. I don't know when exactly that will come out. I don't know if it will be live, but it might be.
Maybe it would be live.
I don't know. We'll see. So that's your general expenses on the lending side as far as the down payment. So there are, of course, lending fees as well. So typically, most lenders are going to charge a 1% origination fee. So that 1% is 1% of the purchase price. So if it's $300,000, it's $3,000 1% origination fee. There's underwriting and processing on that. I'm just going to average it out about $1,500. $1,500, but it's going to depend again on which lender you choose. State averages, it varies pretty widely depending on where you live and who you're using.
Right.
But that just gives you
It really does.
just kind of a general idea. So other things would be title fees. So in Oklahoma, they're really very inexpensive. Oklahoma is the only abstract state left besides Iowa. But I've seen some outrageous fees on some Texas settlement sheets. I'm like, they charge you how much for a title? But it is not that expensive here. I mean, maybe $1,500, maybe a little bit more, depends on the size of the house and stuff like that, because your documentary stamps and your transfer tax stamps and things like that will change based on the purchase price, but the actual title fees themselves are not that expensive compared to other states. The other thing would be HOA fees are something to keep in mind, because that's factored into your debt to income versus, or for owning that home, right? So the lender's looking at everything that it's going to cost you to keep hold of this home on a monthly basis. So HOA fees are a factor. I mean, they can range anywhere from a couple $100s a year to a few $1,000s a year. So it depends on where you live. For first-time homebuyers, you're probably not going to end up in Sheridan Oaks or something where it's like $3,000 a year. No. But the average HOA fee for a typical neighborhood, I would say, $25 a month to maybe $100 a month at the most. It really depends on what the HOA is offering for that neighborhood.
Oh, too. It can be as much as like $100 for a whole year.
Yeah.
So, but I do think, just on a side note, those HOAs, you should read those covenants, just because you're brand new.
Yep. Yeah.
You should know what's going on. Do you want to deal with that?
Yeah. If you're taking notes, write that down to make sure. I mean, it's your right as a buyer to read them during your inspection period, but do make a point to actually read them, because when you move into that neighborhood, you're agreeing to everything on that paper and you're going to abide by those rules. And if you don't, there's the potential of some hefty fines, and it can be pretty horrible situation.
Yeah, it'd be nice if it was just the fee. The fee wouldn't be so bad. But
yeah,
you may want to paint your house red.
Yeah.
And they may say no.
Or you do it and then find out you can't, and you're halfway through, and
anyway.
I don't want to dog on HOAs.
No,
HOAs are actually fine, but sometimes it can be an issue if you maybe didn't realize what you signed up for when you bought the house. So HOA fees is one of them. The other thing would be your earnest money. So in Oklahoma, I don't know really how it works exactly in other states, but most states have earnest money. But in Oklahoma, there's no set amount for earnest money. Some of our contracts are a little ancient. I mean, you could still put up cows as earnest money if you want. Oklahoma is very country still. If you're buying out in those rural communities. But most people don't do that. I mean, you see jewelry every once in a while, or a diamond ring or something, but very uncommon. Typically, it's going to be your a dollar amount of, a check. But typically it's 1%. So you'd say if it's a $300,000 house, $3,000. It really depends on the market that you're buying in, though, because earnest money is essentially skin in the game, right? You're telling the seller, when I make this offer, I'm putting down this much earnest money. I'm putting this money on the line, right? If I don't fulfill my obligations of this contract, I could be subject to losing this money. Right. And that's the point of earnest money. It's like a deposit when you rent an apartment, right? I'm not going to destroy this place because I want my deposit back.
With all the bidding going on, you used to see, $10,000 earnest money for, a $200,000 house. And you're going, okay, they really want this house.
Yeah. So it's definitely like a power move, you would so to speak. The more earnest money you put down, the more serious you are. Aside from that, some people still like to do offer letters. So you would write the seller a letter. I just love this house and I can see my kids growing up here, or I love the backyard, or whatever. People do that, but you do have to have some form of earnest money. It can be zero, but I will tell you, if you submit a contract with zero earnest money, it will probably get declined, just because the seller's like, these people aren't serious, or they don't have enough money to make it to the closing table and get their loan funded. So you always want to have.
If they have a realtor, the realtor should be informing them. If they have a good realtor.
Yeah. So typically, just count on it being about 1%. Of your purchase price is pretty much the norm for earnest money. Other expenses that you're going to incur on your home buying journey are going to be your inspections. So if you're buying in Oklahoma, they're not pass or fail. It's purely just knowledge. Not required, but I do highly recommend it because you don't want to buy a money pit. You know, you buy your first home and realize, oh my gosh, it has thousands of dollars in issues I didn't know, and now I'm going into debt trying to fix my house, and it's just a whole bad situation that could be avoided with a thorough home inspection.
Right.
So our home inspections in town, they're going to run you about, it's all based on square footage, but for a $300,000 house, that size is probably going to be about $350 to $450 for a whole home inspection, and that's like your top to bottom, and you're checking the outlets and the roof, and is the foundation look good, and they're going in the crawl space.
The inspector then will also tell you if you need to go further and get like a structural engineer.
Right.
So
yeah,
they tell you those things.
Usually, if there's a structural problem too, though, Mom and I have been doing it long enough. We will tell you, you probably need a structural engineer to come look at this, because there are just certain things that that you see after a while. It's like, there's a problem. But so your inspection, that's a big one. And then you're also going to have an appraisal. So your appraisal, typically, I would say $600 to $750. Again, it's really going to depend on the lender that you chose, because they all have different fees for that. The lender does order the appraisal on your behalf, and you are required to have an appraisal because you're getting a loan.
Right.
The appraisal really is for the lender, but it's also good for you, because then if the appraisal comes in at value, you're getting a good deal. If it comes in over what you offered, well, then you have built-in equity because your home's already worth more than what you paid for it.
Right.
And if it comes in low, well, you're not obligated to buy the house. The seller has to come down or just cancel the contract, because you can only get a loan for the appraised value of the home.
Unless the buyer has cash to fill in the gap.
Unless you just absolutely love the house, then you can come up with cash for the difference. But we're not seeing that a lot in the market anymore. A few years ago, it was crazy. People were paying, $15,000, $20,000 over the appraised value. And that was honestly just because they were first in line, right? So now all of those people that paid over, now those homes are now comps because someone was willing to pay over the appraised value cash. So now homes are worth what they paid for them. But at the time, the appraisals just weren't there because the market was increasing in value so quickly. But I think things have definitely leveled off now. What else is on here? That's
it.
Pretty much it. As far as what it costs to get into a home, you're going to have lender fees, title fees, appraisals, your inspections, and earnest money and your down payment. And that's pretty much it. The numbers I gave you in this video are purely based on what they are here in Oklahoma and based on a $300,000 house. Right. They are going to vary widely depending on where you live, what the standards are for that area, who you're using. We didn't talk about homeowners insurance and property taxes. So you will have to pay, at least in Oklahoma, a full year's worth of property tax or homeowners insurance. And that's held in escrow for you, but you have to pay a year's worth of premium, just in case something was to happen to the house in that first year. The other thing would be your property taxes. They can't be paid in advance or arrears, so is realtor term. So they have to be paid when they're actually due. So what happens at closing is the seller gives you a credit at closing for the amount of time they lived there until they sold it, and then when the bill comes, which your lender will pay it on for you unless you paid cash for the house. When the bill comes for the taxes, your lender just pays it because you'll have gotten a credit for those first few months before you moved into the house. But property taxes and homeowners insurance are taken care of out. They're factored into your mortgage payment. But then as far as the upfront cost, you just have to pay the portion of the property taxes that you'll be there, and then also the homeowner's insurance in advance for 1 year. And that's it.
That's it.
So I know that was a lot, and it definitely seems like a lot of money because it is.
So to round it up, we got the down payment and just those. So add them up. That's what, 10, 15?
Yeah. I mean, depending on how much you put down, I mean, it's going to cost you, I would figure just average out $20,000 just to have room for unforeseen expenses, and then also just getting everything done. But remember that $20,000 can also be supplemented with down payment assistance
That's right.
programs. We're seeing a lot more of seller concessions. So a seller concession is like a buyer makes an offer. Hey, I'll give you this much, but I need you to cover like $5,000 of my closing costs. That happens a lot.
It does happen. Yeah.
So there's ways to make it affordable and get you in a home and get you out of renting if your dream is to own a home and start building equity. So hopefully this was helpful. I know it was a lot of information. Obviously, you can give us a call anytime and we'll go over it again. Parts you need more guidance on. Of course, follow our YouTube channel because I'm always sharing a lot of these kinds of tips and other things on YouTube, Instagram, and Facebook, even TikTok. And yeah, I think the biggest, don't be embarrassed if you don't know the answer, because nobody knows the answer when you're first starting out, even realtors. When we first get into real estate, I mean, it's like nobody knows this stuff. We talk about it every day, but I think sometimes we forget the basic things that we do on a daily basis. Lost connection for a second. Buyers have like no idea. So it's nice to just don't feel embarrassed to ask the question, because I'm a very educationally, what do you say, educational? I like to educate.
He does like to educate.
Because I think the more knowledge you have, then you can make better financial decisions for yourself. And don't sit there in the dark wondering. Just reach out. We'll help you and get you connected with the right lender for your situation, and then go from there. But if you're interested in buying a house and that's something you want to happen for your future, let's get it going. And that's all I got. You want to add anything?
No, I
think we covered. I'm looking at our list. I think we covered everything.
I think you did.
So hope you guys have a great day. Again, we'll see you in the next video, and watch out for the one with the lender coming up. So all things lending and different types of products, and even more so than what I've shared with you today. That'll be a good one. But you guys have a great day, and we'll see you in the next one.